Hello everyone, I'm Ron and I lead the markets development activity at the ISA. I'm happy to be here. In the next few minutes I'll try to provide you with a quick overview of the possibilities that lay before companies for funding through public channels in Israel. I want to start with the main message, which is whether you are a startup, a growth stage or a mature company, there is something for everyone in the Israeli capital market. We will now look into each of these possibilities so you will be able to determine for yourself which one suits your company best at its current stage. Let us start with the first solution that fits companies at their earliest stage, which is crowdfunding. I will go briefly over the concept and how it works in Israel. So I guess most of you are familiar with the concept itself, which is to fund a venture by raising a relatively small amount of money from a large number of people. In Israel, it means you will be able to raise up to 4 million Israeli shekels, with an extra million in case you are tested and authorized by the Israel Innovation Authority or by the Small Businesses Authority. You can increase the raising limitation with another million by including a lead investor in the offering. This investor must have a certain expertise in the company's line of business. He or she cannot be affiliated with the company in any way and must invest at least 10% of the proceeds in this specific offering. So in total, a company can raise up to 6 million Israeli shekels using crowdfunding in Israel. There are, of course, investment limitations from the investor standpoint as well. Those limitations are meant to protect the public of investors, and as you can see, they vary according to the type of investor in question. Raising capital through crowdfunding brings light disclosure requirements only compared to going public through a full IPO. So in terms of disclosure, you will have to provide the public with offering documentation, terms of securities, and financial reports. And afterward, there are ongoing requirements that will include updates from time to time and annual reports. Today, we have about 6 registered crowdfunding platforms that have carried out dozens of offerings so far, involving thousands of investors. The next solution is for you if you are a growth company past the seed stage, but still don't feel quite ready for going public through a full IPO process. TASE UP is a private platform provided by the Tel Aviv Stock Exchange aimed at companies, mainly tech companies, looking to remain private while gaining access to a new pool of investors and creating liquidity for its existing shareholders. When listing on TASE UP, there is no need to file a prospectus, and there are no ongoing disclosure and reporting requirements under the Israeli securities law. Not every company is eligible for listing on TASE UP. But if you are a tech company or a VC fund, you are definitely an audience this platform caters to. The TASE UP platform actually kicked off only a few weeks ago and has recently seen its first listings. After I finish, I'm sure Lior will be able to elaborate on the more to come in that context. The next solution, which is considered by many as the holy grail for companies worldwide in terms of funding, is to go public on the stock market through a full IPO process. While in certain global markets you will need to reach a substantial market cap threshold to carry out a successful IPO, which usually means reaching significant milestones in your company's metrics, Tel Aviv allows for a much lower entry point. You can be the same fish in a relatively smaller pond. And that's great for growth, as you will be able to get traction from institutional investors that you wouldn't otherwise get on a large-scale market. Moreover, up until recently, a company looking to go public in Tel Aviv would undergo a very local process. And when I say local, I mean that the company would prepare its offering document in Hebrew, hire a local underwriter that would approach local investors. Everything would be quite local about it. In the past couple of years, we've witnessed another emerging concept of IPO in Tel Aviv, which we call a global IPO. The first was that of the Tel Aviv Stock Exchange itself when it went public. They hired a global investment bank to be their lead underwriter, prepared all the offering documents in English, and approached international investors looking for pricing in line with global standards. On the coattails of that specific offering, we have seen more global offerings taking place lately. This method is especially beneficial for tech companies looking to get the international investors community on their cap table and enjoy similar pricing to what they would have got overseas. And since global markets are the end goal of many companies, the Israeli regulatory framework offers a solution for companies looking to list their stock in other global markets as well one day, which is the dual listing framework. This unique framework allows companies traded on specific stock exchanges around the world to list their securities on the Tel Aviv Stock Exchange as well, while continuing to be subject to the regulatory framework of the recognized foreign market. This means that the Israeli securities regulation takes a step back to accommodate foreign regulation it deems sufficiently protective, so that the dual listed company can have two markets for the price of one regulatory framework. Dual listing is currently available with the New York Stock Exchange, Nasdaq, Toronto, London, Singapore, and Hong Kong stock exchanges, as you can see. Simply put, for you, it means that if you have established your IPO here in Tel Aviv, you will be able to list for trading on Wall Street later on, while maintaining your listing in Tel Aviv. You will have two trading venues while being subject only to the US disclosure regime and the SEC as your disclosure regulator. You'll also be able to raise more funding on both markets based on the same US prospectus. So if we're taking a step back, zoom out and try to look at it as a growth story, a company can file for an IPO in Tel Aviv and continue to grow as a publicly traded company here in Israel, and when the time is right, to use the listing on the Tel Aviv Stock Exchange as a stepping stone for listing on other global markets. This is a value proposition that I think, as of today, few markets have to offer. So, after we went through the various options for raising capital in the public market in Israel, I'd like to mention two other topics that may be of interest in your context as tech companies. So the first one is the concept of R&D partnerships. Until recently, only certain partnerships, mainly oil and gas, were able to trade on the Tel Aviv Stock Exchange. A recent change to the regulatory framework now allows for the listing of R&D partnerships, which will invest only in R&D ventures authorized by the Israeli Innovation Authority. There are a few terms, as you can see, but the main idea is that a tech company will get new investments through the public channel as a holding of such partnership. The scope of disclosure the partnership itself will provide for each portfolio company will be determined according to its specific materiality. There are currently 5 listed R&D partnerships, and there are more in the pipeline. Another issue that may be interesting to note is the Israel Innovation Authority's program to incentivize institutional investors to invest in Israeli publicly traded tech companies. And that will be done through government protection for investments of up to 50 million Israeli shekels in rounds of up to 120 million. This protection is given for the initial investment only and is not applicable for follow-on investments, where the main idea here was to connect the Israeli public capital market to the Israeli high-tech sector. Therefore, the program is aimed at Israeli small tech companies with certain features, such as having a certain number of employees in Israel, investing at least 50% of the R&D expenses in Israel, and having less than 200 million Israeli shekels in revenue. So if I try to conclude, from the company's standpoint, there may be various considerations when deciding on funding through public channels, from macroeconomic and sectorial conditions to compliance with regulation and disclosure and so forth. I hope that the past few minutes have given you enough of a background to start discussing this issue internally. I welcome you to contact my team and me if you have further questions or if you want further details. And I thank you very much for your time.